Program is brought to you by IG. Trade over 12,000 shares and ETFs, including major tech giants with extended hours on an award-winning platform. IG, where traders are made.
All right, stock of the day. Thought we'd take a look at one that's been under a bit of pressure for, I reckon, the last 2 years or so. Iress, the financial data group, coming out and saying it expects its adjusted EBITDA for the first half of 2024 to be in the $65 to $67 million range. That's up around 50% from the first half of FY23. The company says earnings in its core business of wealth and market data are expected to be materially higher from the previous corresponding period. Full results will be out August 19. In a statement, the company also said that net proceeds from all its divestments was used to lower debt, strengthen the balance sheet, and paving the way for a return to maintainable dividends. Shawn, Hickman, Iress has been under a bit of pressure for a while, hasn't it? Is this a turning point for them?
It's had a tough time. It's a stock we've avoided for a few years, and I use Bloomberg, I don't use Iress, so I'm probably a bit of a disciple the other way. Costs a bit more money, as you probably know. The result was very good, and the reaction this morning, I haven't seen the last half an hour, but the reaction this morning was very positive. I think I can see the stock going up towards $10. I'd call it a cautious buy, but it's not a stock we watch very closely. We're just keeping a close eye on it at the moment. It could be a recovery play, but it's not got our money. It's not on our buy list. I'd call it a cautious buy, or right here, right now, I'd probably call it neutral, depending if you want me to be all in with a call.
Oh, yes. Well, of course we want you to be all in, Shawn.
Cautious buy.
So a cautious buy. After a company's been through sort of a downgrade cycle for a couple of years now, and sort of how difficult is it to rebuild sentiment in the market? Sort of, yes, we've had the first upgrade. Are you convinced with it?
I'm not convinced yet. This has been the last few years, it's all been about the strong getting stronger and the weak getting weaker. And every time the weak ones have had a bounce, they've tended to get smacked. Broad brush, very broad brush comments, but that has been what we've seen over recent years. So I'm just a bit cautious with Iress right here. But undoubtedly, after an upgrade, markets love upgrades, especially when sentiment is down. So it's definitely worth watching now, as I think a week ago I didn't even have it on the horizon at all.
Okay, all right. David Lane, does Ords cover Iress?
Yes, we do, and we're a little bit more positive on it. And as I look at my Iress screen, I see that the Iress share price is currently trading at $9.97. So they've been up about 10.65% today. So a very strong reaction to that announcement. As you said, it's a company that's suffered a lot over the last couple of years, and I think what today's announcement and even their announcement earlier in May sort of confirms is that they're now getting back to their knitting. They're selling their core Iress screens, which we use on a daily basis. X-Plan is another product that they have, and that has about 60% of the market share in financial planning world to produce statements of advice, etc. They're really concentrating back on that business, which is the core of their business, selling off their UK mortgages business, selling off they've already sold off their loss-making platforms business. So I think it's a positive. And interestingly, a lot of the announcement today was focused on their cost management. So revenues weren't significantly higher, but management have been able to keep their costs under control. So I think it's a positive sign. We've got a buy recommendation on the stock. We've actually got a target price of $10.80. So I think that it's got further to go, and encouraged by today's announcement.
Interesting, because it's at $9.98 at the moment. It's had a 52-week high of $10.51, which was almost back this time last year, wasn't it? When it disappointed and fell off a cliff. Dropped to $4.90 in October. And has now basically taken a year to retrace that. So they've made some, as you were outlining, some really big decisions to restructure the business, haven't they?
Yeah, they have. You're right. It's it's been a strategic shift. New management have come in and really focused the business on what they do well. The Iress product itself is due. We hear due for an upgrade later in the year. So I think they're doubling down on their core business, and that's really where their ongoing revenue comes from. And it's it's a good product, and a lot of people around the market use it, and it's one of those products that I suppose is difficult to move from, because businesses like ours will use it right across our whole company. So you're sort of locked into that ongoing software as a service.
Yep. And of course, we use them here on ausbiz to drive our stats as well. All right. So a pretty good reaction from both Shawn and David on that Iress update today, which is our stock of the day.
You could add a little bit.
This program was brought to you by IG, Australia's #1 CFD provider. Trade over 17,000 markets with extended hours on key US shares and competitive spreads, all on an award-winning platform. IG, where traders are made.